What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benesocky and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. All right, welcome back to Real Estate Investing Demystified. August forgot to change our name on the bottom corner, so it looks like it's just Ava Benesocky speaking.
Well, that's all that matters, you know. I'm just hired help over here.
That's right.
You know, it's all
that's
around
right.
Ava Benesocky. You know, I'm the brains of this operation, and you're the beauty.
No, I think I'm the brains. You're the beauty, maybe. But here we go, guys. Some exciting stuff coming up. We're currently in Naples, and for people that listen to us, I'm not sure if we really mentioned it yet, but currently we're in Naples. So we're really excited because we're kind of boots on the ground in the area we want to be in. And tonight we're actually going to Tampa to speak about the ins and outs of capital raising.
Is it a cool thing? We came from a country that's second largest landmass country in the world, right after Russia, and you know it's 6 different time zones or something insane like that, maybe even more.
Yeah.
Here in Florida, you got the similar population of the whole country of Canada in one state. And within 4.5 hours, you can get anywhere in the state.
It's amazing,
right? You can go anywhere, be anywhere in the state,
incredible.
4.5 hours. So we're driving 2 hours north to go to Tampa, and we're speaking on stage. So
ins and outs of capital raising this weekend. We're actually going on a property tour. It's incredible.
This weekend we're driving all the way to Jacksonville, which is a 4.5-5 hour drive from Naples, looking at a few properties over the weekend. But everything is right here in our backyard: beaches, airports, private jets, assets, investors. You know, so
August is pretty much in heaven. So
we love Florida. We love Florida. So that's as far as
and
update.
We love doing deals in Florida, and we're really excited because stay tuned. There's some pretty incredible deals coming.
1,000 people move to the state every single day, and they want to steal our governor and make him our governor, as I say. We've just been here for like 2 months, and I call it already our governor. They want to steal our governor and make him the president. So, all right, great. We've been waiting for this show for a long time. It's taken too long. We're excited about our guest being on here. In the research, I was just talking to him about the show before we started. I was just speaking with him, and I said, 20 years in real estate, and I in the research, I was doing something on him. I already learned something from him. So very excited to have our guest. But Ava, maybe you can introduce our guest and we can get the show going.
Yeah, so turn the volume up loud, guys. You're going to have lots of value today. So today we're joined by Ash Patel. Ash Patel left a 15-year-long corporate career and has been a full-time commercial real estate investor for over 10 years now. He is a value-add investor and has purchased retail, warehouse, flex, office, industrial land, mixed-use, medical, restaurants, and has also done ground-up development. So from vacant buildings to fully leased triple net properties, the consistent theme is extraordinary returns. So he is a hands-on property manager and also teaches others how to invest in non-residential commercial property through his mastermind at Invest Beyond Multifamily. So we believe this interview with Ash will bring great value to both active and passive investors looking to learn how to invest in non-residential commercial real estate. Welcome to the show, Ash.
Welcome, Ash.
August, David, thank you guys so much. Glad to be here. Congratulations on your recent move to Florida.
Thank you. Thank you so much. And yeah, we're really excited to have you on the show. Ash, maybe you could start out by tell us about your start in commercial real estate. And did you start as a passive investor like a lot of people do?
No, I didn't know passive investing existed. Matter of fact, I didn't know much about real estate investing at all. What got me into commercial real estate investing was my wife and I would go visit our accountant every year. And we would say, hey, how do we reduce our taxes? And this old grumpy guy would just mutter, like, if you make it, you got to pay it. And we're like, come on, like, there's got to be a better way. So I started doing some research and always read that real estate was a great way to offset taxes. Went out and thought, okay, I got to buy some real estate. So I looked for things that were out of the box. I didn't want to buy just a typical residential house. I looked for commercial buildings. And I found a mixed use building in a college town. And now here's the reason this building attracted me. On the first floor was a grocery store, and their lease was expiring in a couple years. So above that, college kids renting out apartments. And here's how dumb I was at the time. I thought, okay, once the store lease is over, I'll go in there, run the store for additional revenue. And there we go. Like, I now own the building. I'm in the convenience store business, and I've got college kids renting apartments above me. What else could be better, right? So as I buy the building, didn't know what to look for. The roof was shot. The apartments were uninhabitable. The gas lines were red tagged. 3-story chimneys were falling down on the sidewalks where college kids walk. So got in there, rehabbed everything, and I advertised the apartments for lease in early August, which was great because school starts in late August. Well, my apartment sat vacant for an entire semester
No.
because I went to college and I remember this. College kids will sign their leases a semester in advance, right? So everybody already had their apartments. Um, I sat vacant for an entire semester. Lesson learned. But once I did get the apartments leased out, I remember I was up there constantly patching holes in the wall, unclogging toilets, just cleaning up after these college kids. I was out there one weekend unclogging a tenant's toilet, and I happened to look out the window. I could see the rooftop of the store, and there was an HVAC company out there replacing rooftop units. So I go downstairs and I asked the store owner what's going on. And he said, Ash, our AC went out. So we're replacing the entire HVAC system. So it blew my mind that $30,000 worth of investment they were putting into my building. So I've got college kids that are destroying my apartments, and I have commercial tenants that are actually adding value to it. And as I'm walking out that day, the store owner stops me again and says, Ash, do you mind if we remodel our bathroom? And I thought, is this real life? Oh my, like, yeah, please have at it. And that was a pivotal moment where I stopped what I was doing. I started an IT consulting company at the time, basically shut that down, became a full-time commercial real estate investor.
Tremendous,
It was
tremendous.
by accident, right? Total accident.
Maybe you
Yeah.
can briefly touch on what is triple net when you're talking about commercial real estate, in particular asset classes like office space. I believe has triple net. Some commercial storefronts have triple net. Maybe describe what that it means.
August, let's demystify triple net, okay? Because everybody assumes when you have a triple net property, it's mailbox money, right? You made it. Now, let me explain that to you. So, the true triple nets or absolute triple nets are going to be your Starbucks, your Walgreens, your McDonald's. And those are what people think of triple nets, where if the roof blows off, the parking lot needs to be resealed, meteor hits it, you don't even get a phone call. The tenant is responsible for everything: insurance, taxes, maintenance, roof, parking lot, literally everything. Now, there's so many variations of triple net where I've purchased triple net properties where the landlord is actually responsible for everything, but you get to bill back your expenses. There's other triple nets where the tenants will be responsible for taxes, insurance, a limited amount of maintenance. They will pay for roof and HVAC repairs, but they will not pay for replacements, right? So the devil's in the details of all of these triple net leases. And unless you see words like absolute triple net or zero landlord responsibilities, it's not going to be what most people think of as a true triple net, right? There's all kinds of variations. And then there's limitations where we'll pay a CAM charge, common area maintenance, that covers taxes, insurance, maintenance. But every year it can only go up by 5%, right? There's so many variables. So when we look at commercial deals, we literally have to read every one of the leases, and some of them could be 40, 60 pages long.
Got it.
Do
Got it.
you stick to like the leases that say absolute triple net? Are you very
No, a good question. We don't want those because those Starbucks, Walgreens, McDonald's, the returns are so low. They're still trading at 5 caps, right? And interest rates today are closer to 8. So those are for people that are 1031 buyers that are parking money, or they just want a steady coupon for the next 10 years. There's no returns in those,
Yeah.
right? And they have to be cash buyers because financing those doesn't make sense. You're upside down.
Right, right. No, that
Got
makes
it.
a lot of sense. Ash, I was going to say it's really truly mind blowing when we look at your background and your experience in commercial real estate as a whole. You've got the retail, warehouse, flex, office, industrial, the land mixed use, medical, restaurants. And then we were talking about obviously triple net and from vacant buildings. But tell us, why not just focus on multifamily? And the reason I ask is because um, it's an asset class that you're already familiar with. When you
And
first
every guru out there talks about multifamily and what have you. I mean, you have it in your beyond multifamily, but yeah, talk to us about what,
why
what,
venture into all these other asset classes?
That's a really good question. I've never been asked that before. Um, I'm going to think out loud. It's because we chase high returns, but the real honest answer is I'm really bad with dealing with residential tenants, right? So those college kids, they ran all over me. All the single family houses that I've had, the small multifamilies that I've had, I listened to every sob story and believed everybody's, stories. And I would let people go for months and months at a time. And then I would just get so frustrated and pissed off that this person was, messing with me and they really had no intentions of paying rent. I was really bad at it, right? So I can't compete with people like you that have these teams and systems and years of experience built up already, right? So the level of competition is one. The fact that I'm really bad at it is two. The returns in the asset classes that we follow are much, much higher, and I would rather deal with business owners as tenants versus residential people living in my properties. So that's the key, right? Our tenants are all business owners. If they see trash in the parking lot, if they see something out of place, it behooves them to make it right. And a lot of them in their lease, they're responsible for exterior lighting. They're responsible for parking lot maintenance or, paying all their utilities, whatever it is. There's also longer term leases with commercial, right? So we don't have turnover. We don't have to go in there, turn apartments and pay a lot of money. We don't have people destroying our commercial properties. We've never had to evict a commercial tenant. So
got it.
it's just, and we self manage our entire portfolio.
Okay, nice.
So they're easy to manage, right? With apartments, when you get to 40, 70, 80 units, it's a pain point where you have to start hiring leasing managers, maintenance people. With commercial, we can self-manage everything.
Is there a particular property type within all the asset classes that we spoke about that you're focused on? I got an email from you. You're hosting a webinar on industrial flex. I'm not sure what flex means exactly, but industrial, I understand. Is there a particular property type that you're focused on, or you would invest in anything as long as it matches your regional focus?
We will invest in anything as long as the returns are close to 20% cash on cash or higher. And
Got it.
if they're lower than 20%, there has to be a huge value add on the back end. Industrial right now is very hot. So to explain what industrial flex is, everybody knows what an industrial building is, right? Those big factories, warehouses, they're all classified as industrial. Flex spaces are ones that are flexible in size. So often, the typical flex building that most of your listeners would buy would be a building with a number of garage bay doors and man doors as well. So they're very flexible in their uses because we've had churches, cake decorators, tint shops, pest control, landscapers, fire suppression companies. We've had all of those as tenants in these flex spaces. Now, they're also called flex because there's a combination of retail, office, or warehouse in each of these buildings. So if somebody just wants, if there's a landscaper, they just want all space to store their trucks and lawnmowers, they don't need an office, right? If there's, let's say, an HVAC company where there's a couple people in offices, you can easily put up drywall, frame, whatever, a little bit of HVAC, and you have a little bit of office, but you still have room to store equipment, pull vans in. If they're a church, they don't want any warehouse. They're going to finish the whole inside. So flex space for each tenant is flexible. And as the new tenant comes in, they often, on their own dime, will make the space what suits them.
I've officially learned two new things from Ash already
And
today.
we're only 10 minutes in. We're only 10 minutes.
In August, I'm telling you, it's a great asset class because the returns are so high. The tenants know that they're getting whatever space they're getting as is. And it's amazing how much money they put in to your building, right?
Right.
And there's not that many people chasing them. So yeah, we're doing a webinar at the end of September. I'm going to try to give everyone as much value as I can in 30 minutes. But I'm going to teach you, the audience, basically how to find the right flex space, no matter what the price range is, how to manage them, how to find tenants for them, how to improve them. But for you two as well, I would encourage you to look at those flex buildings. They are by far the easiest to manage because the expectations of the tenants are so low,
Right.
right? I mean,
I
it's
already
a
signed
metal
up.
building.
I already
Well,
signed
August
up.
already signed up. All
Okay,
right,
okay,
perfect.
let's get this one.
Ash, maybe we can talk to us about acquisition. So currently our company is focused on multifamily value add in Florida with a hyper focus on Jacksonville and Tampa. Just being focused on this one market and asset class takes up all of our time, I'd have to say, most of our time, that's for sure. But how are you able to underwrite and assess all these different asset classes and property types?
That's a really good question.
And do you have a
We
model,
have,
for example, like, sorry to
Yeah.
interrupt, but like when we did we were focused on multifamily, a BTR deal came along and the underwriting model was completely different than the multifamily value add model because it was a forward purchase contract. Houses were being built and delivered in phases. The model was totally different. Do you have a certain model that you modify depending on different property types? So talk to us about the whole acquisition process.
got it. So for underwriting, I've seen multifamily underwriting spreadsheets and they are intricate. They are phenomenal. For us, our deals have to work on the back of a napkin, right? So our underwriting is very, very simple. Um, if it's not an astronomical cash on cash return on the back of a napkin, we don't pursue it unless we can find something that nobody else sees, right? So in terms of acquisitions, I've got two awesome business partners. I've got two colleagues that work with me as well, and I've got a network of people that do mostly multifamily or mobile home parks. So when they see commercial deals, they'll bounce them off of me. But it's also just looking for mispriced, mismanaged, or mismarketed deals, right? So for your audience, one of the best ways to find commercial deals, look for residential realtors posting commercial deals. Some of our best deals have been brought to us that way. They don't know how to price them, right? They often just use comps or a dartboard, and so often they're vastly underpriced. So if you can get first mover advantage by constantly looking for residential realtors posting commercial deals, that's one way. Some of the more creative ways are, we'll
What
get on
on
bid.
that point, sorry, Ash, can you make the difference between commercial brokers and residential brokers and how they appraise a property or assess a property?
Yes. So commercial brokers will use NOI and cap rate, right? A true valuation of what the property is worth. Residential realtors, I would say 95% plus do not know what NOI or cap rate is. No fault of their own. It's not the world they live in. So when they price a property, they do what they're used to. They find comps, not realizing, this building has mom and pop tenants. This building has national tenants, right? The income from this is higher than this. So all of these factors come into play. And again, if you guys and girls can just keep your eye on residential realtors posting commercial deals, it's a great way to find good deals. August, another creative way is get on bizbysell.com. And nobody does this. Like, it's a site where people go to buy and sell businesses. And here's the crazy thing that I've learned is business brokers know very little about commercial real estate. Commercial real estate brokers know very little about buying and selling or valuing businesses. So it's a very fine demarcation line that doesn't get crossed. If you can find a deal on bizbysell.com or from a business broker, so bizbysell.com or other business brokerage sites where you can go in and you find a business owner that's selling a business, but oh, by the way, the property is included as well, or by the way, I'll sell the property as well. The property is an afterthought to them because they're more focused on the business that they've built. They're more interested in selling that. So if you can say, hey, do you have any buyers just for the business? Yeah, but I want to sell the whole thing. Awesome. How about this? I'll buy the building, sign a lease with the people that are wanting to buy the business. There's a bunch of creative ways that you can slice and dice those deals, right? And
Right on.
again, there's not a lot of people doing that. The other thing is, we can find commercial real estate brokers that are just not very good at their job. And we've gotten great deals where they have their own little website. They only put the deals on their website, but they won't put them on LoopNet, Crexy, or any of the other sites. So if you can bookmark those and constantly stay on top of those, that's great.
Yeah,
Got
and
it.
then there's less competition too,
But
right? There.
yeah, one moment here before
Yeah.
we go through the rest of the questions. Let's say we have, and this is kind of a dream that's being sold as far as real estate is Ava and I were both real estate professionals. We realized about multifamily and the syndication process and real estate private equity. We really fell in love with it and co-founded CPA Capital. But there's a lot of people who get into real estate for different reasons, like yourself, when it comes to tax reasons and what have you, and people want to work differently. They want to kind of get involved in the investment world and what have you. But if somebody's watching this and they've invested in real estate before, but it already seems convoluted enough, but now Ash Patel's model is all of these different business models, all of the different asset classes, all of these different property types, does that become too cumbersome for them to want to, one day look at a warehouse, one day look at a industrial flex, one day look at office, is medical, should they start somewhere? Like, what would be your advice to them?
Or do they feel like you provide them with this diversified portfolio as it is? Like,
As a GP
yeah,
kind of thing?
as a GP.
Well, we haven't even talked to him if he syndicates his deals or not, but I'm just saying that somebody watching this and wants to follow the path of Ash,
Yeah.
it might seem too cumbersome to come and try all these for their acquisition criteria to be this broad.
Yeah, I get what you're saying. I don't chase assets, I chase returns, right? So look, if multifamily starts spitting off 20% cash on cash returns, I'm going to learn from you guys, right? I'm going to try to figure out the multifamily game. Look for returns in anything that you do. If you invest in the stock market, if you invest in startup businesses, if you invest in real estate, the one metric that should carry across all of your investments is cash on cash returns, right? So that's what I focus on. Now, to answer your question, August, um, I don't know the answer to that. Maybe I was lucky because I started out with a mixed use building, went on to do retail, then warehouse, and medical, and all these other things one by one. And I guess I learned a little bit from each one of those. But start somewhere, right? And not one isn't harder than the other. Whether it's a warehouse, a retail building, there's a learning curve on every one of these assets. So pick one. And once you start with one of them, it's easier to transition into the next. And even with retail, no two retail leases are the same. So there's always something to learn. So my advice to everybody is look at returns. Do not have blinders on, right? Look at every asset class that's out there. Just find the best way to get the highest return on your money.
Got it. Fair enough. Now, you talked about earlier as far as self-managing the properties, the assets that you own. Talk to us about that. A lot of times, multifamily is advertised that, hey, this is somewhat passive because you have a property manager who handles everything, and they charge, depending on the size of the property, 3 to 10% or 3 to 7% of the rental income they charge for the property management. So it's very much hands off. When you're buying these type of property types that you buy, you self-managing it. I'm guessing that they're all in one certain region that you have access to. Talk to us about the whole process.
No, they're all over the Midwest and the Southeast.
Okay.
So managing something remotely or on site is not much different. COVID is what really made me not go on site to my properties. I'm an extreme extrovert, so I love going to my properties and hanging out with the tenants, finding out what's going on with their businesses, and just seeing them thrive. But during COVID, we ended up moving out of the city for the summer, and I was away from all my properties. So we just put systems in place, right? I learned how to get things done without actually going on site. Now, I'll give you a couple examples. So I have an office building, And if I need to do a showing, it's silly for me to drive an hour to go do a showing. Find your super tenant, your super user tenant, and give them a discount, pay them a little extra, whatever, but have them do the showings, right? They're already a champion of your building. Who better than somebody that's already a tenant to show a prospect the office space? If there's an HVAC company plumber that needs to get in, same thing. Have a lockbox on the building. Have a tenant let them in for showings, or sorry, for marketing. We've we've used brokers in the past, and for very specific properties, for example, a 30,000 square foot big box store, you need a broker because that's a very unique tenant to find. But when you have a normal office, a restaurant, a 2,500 square foot retail space, a flex space, you can advertise those on your own and find your own tenants and not pay the broker commissions, right? And property managers will charge us 6%. Plus, they'll charge us commission if they find tenants for you. So I'm telling you, it's very, very easy managing commercial properties relative to multifamily.
Got
And
it.
once the tenants are there and they keep renewing, there's very little to do.
Do you teach this? Do you coach this type of investing for investors?
I do. That again happened by accident. Post COVID, I had a bunch of multifamily people reach out to me and they said, Ash, we're getting killed in multifamily. We have tenants that aren't paying. We have tenant friendly laws. We can't evict them. And we can't find any good deals because the competition's so stiff. We heard commercial might be a good way to go. Can you talk to us? I agreed. I had about 6 people on a Zoom call for about 2.5 hours. And at the end of that, they said, how do we keep learning? And I said, you don't, man. I don't have the time. I'm inundated with what I have going on. I'm sorry. And they just kept insisting. So this was a couple years ago. We started season 1 of the commercial mastermind. And I didn't know what I was doing, right? I mean, each class was 4 hours long. We went for 6 months. And by month 4, is when people's mindsets started shifting. Now, keep in mind, most of our students came from multifamily mobile home parks. We had a couple of people that already had millions of dollars of commercial properties, and they just wanted to get into commercial more. So mindsets started shifting, and people started taking down commercial deals. People started quitting their W-2s. So we're now entering into our 4th season. I only take 20 students at a time, and it's an intense course. We meet every Tuesday for about 3.5 hours. Classes are recorded, and
And
that's it, man.
you help underwrite deals amongst each other. You guys talk about deals you have under contract, and there's partnerships that brew within this mastermind, like all that good.
Yeah, there's organic partnerships that brew, but I'll teach everything from how to find the deals, how to underwrite them, how to manage them, remote managing, how to increase the value of it, how to raise capital, how to dispo the properties, how to
Okay.
deal with brokers, bankers, everything.
Okay, we're
Right
gonna
on.
have in the show notes. We'll have some. I believe you've either shared or we'll ask you to share that. So we'll include in the show notes if people are curious about that.
Yeah,
But let's get to the
absolutely.
next question here. Try to use the best of our ability with Ash on the call. We know he's a super busy guy, so
Yeah, no, absolutely. Ash, I was curious, do you syndicate these deals that you
W-
purchase, and how do you fund the equity, and what structure do you use?
We
fund
do,
or
but
syndication or how do you JV? How do you do all this stuff?
yeah, we do all the above. But Ava, keep in mind, in our world, there's no $30 million strip malls, right? Most of them are $5 to $10 million. If you get a Whole Foods strip mall, it might be 15, 20 million. But with apartments, it's not uncommon to see 50, 60, $70 million properties. Our down payments are always 15 or 20%. So we don't raise as much capital as the multifamily folks do. But yes, we syndicate, we've got a fund, we'll do joint ventures. Every deal is different. But again, our raises are much more limited. And we usually come in for half of the raise. So if we're raising $2 million, we'll put 1 million in, and then we'll raise the other million because we want a part of the deals, right? I
Got
mean,
it.
they're good deals.
So the
Absolutely.
GP is investing a million, and then are these LP investors or they're co-GP or they're joint venture? You would call them maybe.
For On rare occasions, they're joint ventures if they come in with a large dollar amount, but for the most part, they're just LP investors.
Investors that
And
want to have exposure to this type of commercial real estate and what have
yes, And our splits are different on every deal. The very first deal that we syndicated, we gave our investors an 18% preferred return, which we then bumped up to 22%.
Wow.
But then it's a 30-70 split instead of a 70-30. So we get the 70% at the end, investors get the 30%,
Right.
right? We've done 50-50 splits with 8% preps. Each deal is just so different.
Got it. Got it. All right.
Very
Let's
cool.
switch the conversation now. We talked about all of these different asset classes, and people want to learn. This is the way. A lot of time we bring on expert guests and they talk about it for an hour, and people don't have a way that they could actually get involved in that business type. But in this case, you have someone here that's going to be able to be your coach, be a mastermind, do deals with them. Maybe you have deals in your area and you're like, hey, I'm wondering that I want to buy this pharmacy or I want to buy this gas station. I wish I had like-minded people that would be interested. Here's your chance to get involved. And I'll probably want to chat with Ash myself because I would love to diversify into triple net properties as well. But let's talk about you as a podcast host as well. You're an investor, entrepreneur, but you're also a podcast host. We're podcast hosts as well. So we've learned a lot through our journey of being podcast hosts. I believe you co-host a podcast with Joe Fairless, the longest running podcast ever. So you have interviewed many great minds of the real estate investing world. So we had like a kind of few questions just to see what you learned in that journey, if it was similar to us, because Ava and I, it feels like a mandatory course, once a week or twice a month, we have our podcast show. We do research on our guests, so we learn lots, and then we have interviewed our guests, so we learn a lot about them. So it's been educational for us. We create content to connect with like-minded individuals as well and partners as well. But we want to learn a little bit about your journey as a podcast host. Overall, give us a quick rundown overall before I go with specific questions. How was it? Did you enjoy it, or what's going on?
Good question. So the podcast was started by Joe. He's done over 1,600 of them. He called me one day and he's like, hey, if I change my podcast to be all commercial, would you be one of the hosts? And I'm like, oh my God, yeah. And he was shocked. He's like, really? I'm like, yes. Well, then I don't hear from him for the next 6 months about the podcast. And I'm like, he forgot about me. I was pissed. And then I get a call from his team and they said, okay, you're starting next Wednesday. You're doing 4 podcasts every Wednesday. And I'm like, wait a minute, like, I don't have any equipment. I don't know what to do. And like, Joe didn't tell you? And I said, no, you'll figure it out. So I got thrown into the mix. Luckily, Joe had done an episode on what equipment he uses. I hurried up and bought the equipment. The first podcast that I did, Joe sends me a long email and he was not happy because just a few months earlier, I criticized him. And I'm like, hey, you asked too many softball questions. I'm like, here's a list of harder questions that you need to start asking. So he throws this back at me. He's like, hey, and by the way, minute 4 of this interview, why didn't you ask that question? And that was one of your questions. And I'm like, oh my God, I don't know. Like, this is a lot harder than it looks.
Right.
And then he's like, you have no energy. He's like, I've seen how you welcome people that come into your house. Why can't you do that in the podcast? I'm like, I didn't know I was supposed to. Oh my God. Like, I'm going to get fired from I was panicking. Right. So I was a terrible podcast host for many, many months and started getting a little bit better as each one went on. And you two know this is not easy, right? It looks easy, but man, there's a learning curve. So my hat's off to you two for what you do. But you're right. It's like it's like constantly reading a real estate book on different subjects, right? You will learn everything from how to invest in farmland, how to set up a fund, how to deal with foreclosures, how to deal with how to get rid of investors, how to take on investors, when deals are going well, what to do when deals are going bad, what to do. It's just
How many podcasts have you done?
a few hundred. I have no idea.
Wow.
Few hundred, and you said you do 4 every Wednesday?
Correct.
Oh, wow. So just a quick thing. I was on Joe Fairless's podcast, the same podcast that Ash runs as well. And Joe put me under the gun more than anybody else. So I was giving him my background on how I got involved in the syndication world. He actually came in and asked proper questions.
Telling him.
He probably read my list of questions. Good.
Awesome. Okay. So let's, let me just quickly ask you, maybe we can touch on that. But before that, this is something interesting that we noticed. We noticed a lot of these high achievers that we interview on our show, including yourself. They're big on things like health, longevity. They look at life differently. There's a consistent book they all read. Is there something that you have noticed which is like a contributing, it was something that's consistent that contributes to these people's success? Maybe they're all very punctual, which hasn't been really the case. In most cases it has, but is there something you notice from interviewing so many real estate investors that is consistent among all of them, that, hey, if you have these types of characteristics, you probably have a high chance of being successful? I think billionaires, they say a lot of them have ADD, or they have very creative minds. Is there something in amongst these real estate investors that you notice that you're like, hey, seems to be a common theme, and amongst these people? Is there something you remember?
August, I don't know if it's a character trait, but the people that are very successful always have systems in place, systems and people, right? Now, for character traits, I'm the opposite of most of the people that I interview. I'm undisciplined. I stay up late, hang out a lot on weekends, but I'm a visionary, and I've learned to hire integrators, right? And that was a very hard lesson. I learned that way too late in life. But that goes back to having the right people and the right systems. Now, I know a ton of people who do their morning routines, prayer, meditation, exercise, gym, gallon of water, like all before I even wake up, right? And they're not very successful. They're trying, but they're not there. I honestly believe it's people and systems around you,
Mm.
right? Because we've seen, Joe Fairless is the opposite of me. The guy is extremely disciplined, heads down, gets things done. I want to go out. I want to network. I want to hang out with people. I want to grab drinks with people. I want to hang out with, real estate people. And that's how I get things done. But the way he gets things done is just being hyper focused on writing books, his blogs, podcasts, website, marketing, all his systems, all his people, right? So we're complete opposites. So I don't know that it's character traits other than, read Rocket Fuel. If you are a visionary like me, you might be hard on yourself thinking you're scatterbrained. Why can't I ever follow through on things? I start, my wife, gosh, you never follow through. You start something, you don't finish it. You have all these open projects. In my whole life, I thought that was a detriment until I read that book. And it turns out it's not. It's just how visionaries are. And you have to have somebody next to you that's an integrator, right? So if you're an integrator that can't come up with these wild ideas, get a visionary to partner with. So people and systems, more important than any character trait out there.
I
Nice.
wonder if I'm the visionary and you're the integrator, or vice versa. But
I think we both.
Why don't I host a podcast where we get to the bottom of that with the two of you?
absolutely,
That would be fun.
that would be awesome. All right, great.
Absolutely.
Last quick thing here before we move to the next
Yes,
segment on our
please.
show.
Yes.
You are organizing a mastermind, where that we discussed already, and we put in the show notes. I think we talked about that. But there's also a conference you were talking about as well.
Yes, October 11th through 13th in Cincinnati, we have a 2-day conference, 2.5-day conference where you come to town, great speakers lined up. And the second day is property tours just from Mastermind students, right? So you'll see properties that are $150,000 to a couple $1 million. And you'll hear the stories behind them. And these were people that didn't have any commercial real estate experience, and you'll hear the stories on how they did it. You'll see the numbers behind it. So I want to give everyone that opportunity to head start in commercial real estate. It's a great networking opportunity as well, limited to 100 people.
Got it. Got
Oh,
it.
right on.
But the mastermind is limited to 20, and that'll be in the show notes, right? That's as far as you want to talk about the mastermind.
Yeah. Thank you for allowing me to do that. But yes, that's, I think, enough. And go
Perfect.
to Invest Beyond Multifamily if you want to see
And
more.
we'll ask you at the end of the show
Okay.
again for that, and we'll put in the show notes.
Absolutely.
Okay, great. Let's get to the next segment of the show, and thank you for sharing all of that for us.
Yeah, okay, we're
everything, all
gonna-
your wisdom and knowledge, and really enjoy talking with you. But let's
Yeah,
get
we
to the
learned-
next one
we
here.
learned a lot, Ash. Next segment of the show, the 10 championship rounds to financial freedom. We're going to ask you serious questions, whatever comes top of mind. Are you ready?
Let's do it.
Okay, here we go. First question. Who's been the most influential person in your life?
Influential, probably my wife. Most supportive and most influential. She leads by example, and yes,
Nice.
definitely my wife.
Most of our guests say their spouse. In most cases, they don't want to get in trouble, so that's what.
Well, I thought about it. I mean, I took a second.
He actually
Yeah.
thought, he thought, and it was his
All
wife.
right, next
All right,
question.
next question, Ash. What is the number one book you would recommend?
It doesn't have to be a real estate book. It can be any book you
Yeah.
like.
I would say either Who Not How or Rocket Fuel.
Rocket Fuel, you already mentioned
Yeah.
that. Put
Love
it
Who Not
down.
How. That's so awesome.
Okay.
Okay, next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
Don't waste time, and create a bucket list, which I did, and spend your free time checking those boxes off, because that bucket list sat for many years, and now I'm finally getting around to checking those off, right? So in my 20s, I should have been working on going to those places and learning guitar and those kinds of things.
Oh,
Amazing.
nice.
Amazing. Great advice.
I love that. Okay, next question. What's the best investment you've ever made?
A land deal that we bought for $8 million and essentially wholesaled for 12.4.
Nice.
Those ones are always nice.
Okay, that's awesome. Now, what's the worst investment you've ever made, and what lessons did you learn from it?
Yeah, I was in a moment where people around me were like, "Oh my God, everything you touch turns to gold," and that was just because the market was going very well, maybe 2014, 15, and there was an estate auction in a river town that had been ravaged by drugs and job losses, and I had such a big head. I thought, okay, I'm going to go buy that whole town, right? Me and another real estate investor, they were buying some stuff as well, and just like all the other properties I've bought prior, I was going to go in there and turn them around. Well, I bought a bunch of, here's how stupid I was. I was on vacation. I had one of my tenants who was in that town go there and bid on my behalf. I couldn't even hear him on the phone. All I heard is, Ash, do you want to keep going? I'm like, yes, yes, yes. After I hung up, my wife's like, what'd you buy? I'm like, I have no idea, but I bought several properties. And I come back and visit them. One of them was a building that looked like a bomb hit it. Half of it was gone. The front half was gone. It was unsalvageable. And just, it took me years and years and years to unravel these buildings. It took a tremendous amount of headspace. And it was, the kick in the butt that I needed to learn that not everything I touch turns to gold. So it was just me getting a big head. When times are good, like they have been for the last 12 years, keep that in mind that they're not always going to be good.
Right.
Donald Trump talks about in his book Art of the Deal that you should always visit the property you buy. Most cases, in some cases we can't, but to at least be able to see what you're buying is good advice.
You would think, right? You would think most people would do that except me.
Except you, Ash. All right, next question. How much would you need in the bank to retire today? What's your number?
I would say 10 million.
Okay.
And I have a feeling he's figuring that out through cash flow he'll produce on his triple net properties.
No. Do you guys have time to dive into that for a second?
Yeah, please,
Look,
please do.
this is one of the biggest mindset hurdles I try to get people to overcome. Everyone that comes into my mastermind has this number. I need $35,000, $40,000 a month in passive income so I can retire. And it's no, you don't. You don't need any income. You need a net worth number, right? Because if you have $10 million in the bank, you can retire. If you have zero income coming in, awesome. You can then start making investments. But I see so many people making bad decisions based on hitting that $35,000 a month passive income number. I've got a student who owns a couple businesses that he's just fed up with, hates it, but he's trying to hit his number and he won't sell his businesses, even though they take up all the time that he should be investing in real estate, because he's trying to hit that number. I have people that they hate their job and they won't quit, even though they've got millions of dollars in equity in their house, liquid in the bank, but they think they need this passive income number to retire. If you have $10 million in the bank, I promise you, you don't care at all about passive income, because you can then go out and make more money. So focus on net worth instead of passive income. Passive income can be manipulated. Net worth is the one number that doesn't lie. So I think everybody should, if they have a passive income goal, get rid of it. Have a net worth number.
Okay.
Great perspective.
Yeah, thank you for sharing.
I respect
Ash.
that actually.
Yeah, same. Okay, next question, Ash. If you could have dinner with someone dead or alive, who would it be?
A huge fan of Leonardo da Vinci, right?
Yes.
Okay.
He's just, not many people know about him, but I can't speak Italian, so that probably wouldn't work.
Have a translator there.
Yeah.
We've had
Um,
all over, we had people talk about family, grandparents. We've had people talk about certain books they've read multiple times. We've talked about people with scientists,
Jesus.
sport athletes, Jesus. So those are majority of the common ones that people have said. But Leonardo da Vinci is he was pretty versatile. I think it wasn't only art that he did mechanics as well or something. Or
Mechanics. He was an inventor.
yeah.
Just one of the most underrated people in history.
Okay, cool.
Okay. All right. Next question. Okay. If you weren't doing what you're doing today, what would you be doing now?
And this, let me decipher this question a bit. Is like some people would be a race car driver, they'd be a mountain climber. So it's be as extravagant as you wish, or as subtle as you like. But it's
This might be a boring answer, but I'd be doing exactly this, right? And it sounds stupid, but even if I hit the lottery, I would still do this. People, I used to say I love my job when I was in the corporate world, and it was a lie. I hated my job. Anybody that says I love my job, ask them if they won the lottery, would they keep doing that for free?
Okay.
Answer is usually no. And I've thought about this a lot. Even if I won the lottery, I would keep doing this, right? I think it's fun. It keeps me sharp. Uh, it's just a ton of fun. So this is exactly what I would be doing. I wish I learned it earlier in life, but yes, this is it.
Exactly where you want to be.
I would never stop private equity.
Yeah.
Good.
Yeah. All right, Ash, book smarts or street smarts?
Always street smarts.
There you go, baby.
Nice.
All right.
All right. Last question. If you had $1 million in cash and you had to make one investment today, what would it be?
A commercial property, a value add. Let's take maybe a strip mall or an industrial building that has a fair amount of vacancy and it has not the greatest tenants. So the most upside possible.
Right on.
Amazing. Thank
Ash,
you for that.
this has been really great. Maybe you can just let everybody know what's the best way that they can reach you.
You can find me on LinkedIn. It's ASHPATEL, Ash Patel Cincinnati. I'm on Facebook, Instagram. My email address is just ash@investbeyondmultifamily.com. You guys are awesome. So it was a pleasure being on here. Thank you both so much.
Thank you,
Thank
man.
you as well. Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.